Yo guys, I don't wanna yap, so let's just go straight into it. More back testing. Let's go. Here's a quick update on the trade I took last video. Let me get rid of that. Once again, let me talk you through what I took. So obviously there was liquidity here from before, as we marked out. From here there was a high here that eventually got swept due to this liquidity sweep, and you had this high as well, but it got swept here. So it was mainly this high. Oh, sorry, no, this was the low that I marked up. So here, there was liquidity resting under this area and liquidity above this area. So it was a sweep basically. No, under that area. So the point is, I knew it went up. It's gonna eventually go down. So once I think I looked for a breaker structure. So uptrend, uptrends looking at ups. So that's here. Yep. So this would be the high. The uptrend we're looking at low. Sorry. So this is here. This candle was underneath it. All of these candles were underneath that high or that low. Even with here, this candle was underneath it, so we took the trade here. That's a breaker structure. So yeah, so I took the trade there. I was aiming for previous levels of liquidity, so I went down just below the bottom here. It was 37 pips, and it was 1 to 2 RR ratio. So yeah, it went pretty good. I did a 1 lot size, so I got about 3,000 something, 3,600. And I think I've made a stupid trade because my reasoning with this was while I was at the gym, I just made this like without proper analysis. I thought there was a lot of selling right now, so I thought it would go back to equilibrium. But now that I'm thinking about it, this whole sector might be a liquidity sweep, and it might stay back in these that it might stay back in this range. And to do that, yeah, so this could most definitely be a liquidity sweep. Yeah, it most likely is. So the trade going on now, check over it. We can get rid of this. Actually, no, I'll keep on for now. Yeah, so right now it's still near. I'm still in profit, I guess. Well, I did 0.25 loss. That's for that one. Yeah, right now I'm up by 63 pounds. But it's most definitely gonna like go higher than this. So when it reaches up about here, I think I might cash out. I might close the trade. But yeah, that's what's going on so far with my current trades. I'm gonna do a bit of back testing now. So once again, help Gold Chime. Shout out to Kaden. Bro, put me on to Gold Chime, by the way. Alright, so let me delete everything. Okay. Let's just keep this as random as possible. This is October, September. Breaks, I don't know why. The jailbro here. You know, there's still breaks, but so we'll go 1 hour. We play. Oh, yeah. Okay, so we'll just mark openings. New York session, yeah, this is gold USD. 12 p.m. is here, so we'll just go to the next 12, which is here. What's this? Alright, so I'll let it play till. Okay. Alright, there we go. Okay. Alright, so if you look in this session, the high is right here. We can yep, and the low, that is probably a liquidity sweep. Actually, it's not. Is it? Most recently, we'll go with that one. Okay, that's the highs and lows. And we'll go to 15 minutes. I think we might have to go 5 minutes actually. I don't think that. What? Okay, so I didn't do this right. I don't know, just bugged out. 1 hour. Replay right here. Okay, then we change this to 5 minutes. There. Okay. You know what? I'm just gonna. I won't go that far. 5 minutes, 1 hour. August. We'll go start of October. Okay. We'll see if you can trade as much as possible in October. October's. Yeah, session open here. This is announced. New session. Okay. Wait for it to finish to start here. So then I can really analyze what's going on. Try to keep this as short as possible. First of all, there's our low. Here our high. Yeah, we can just call that the high. Okay, then let's go to 5 minute. This kind of ruins it, but let's just replay it for me. Yeah, okay. So there we go. That was the high. This was the low. Then that's for okay. First of all, we know this is uptrend right now. So uptrend looking at low. So this is a low. Most recent low would be this one. And so far nothing's broken above it. So we would go. Ideally, we'd go for a very short long trade. I already know what's gonna happen because due to that fact, but I'm guessing we're aiming for this since to liquidity. This should be fairly short. Yeah, so first of all, this trade, once again, I'm taking it because it's the uptrend, and so far there has not been a proper break of structure. So we'll take it. There we go. There we go. That's the first trade done. Okay. So liquidity has been swept now. So that's checkpoint one of our, daily trade. We took this trade, but this was just a like more of a learning trade. We won't properly count this. So that's the liquidity sweep done. Now we're looking for a break structure. So once again, we know that it's going to be a break structure. It's uptrend. So we're looking at the lows and the most recent. Okay, let me get rid of this. The most recent low would be this right here. So we're looking for a candle that ends under that. Okay, there we go. Okay. There's our breaker structure. Since this was the low, this ends below the low. We're looking for a fair value gap as well. Can't actually see. Okay, wait a second. Um, yeah, there we go. There's our fair value gap. One there, but there. Before I was testing it, and it looks like it might continue to stay up, because yeah. Well, we're looking for a break structure, so we're looking for the low. So it'll be if it's next is a green candle, it isn't. So this is the low. Anything below that now BA. Okay, there we have break structure. So ideally we could go short right now. Short. And once again we're aiming for okay, we're aiming for place the liquidity. Here we go. Here's liquidity. Definitely some here. Okay. Doing this again. Okay, once again, we'll try wants to. There we go. Some here. Could go for the low. I think we'll go for the. I think we'll go for this one. So that's 10 pips. Let's see how much the low is. 30 pips. So we'll go for there. I don't know if this is even going to be hit, but let's see. Yeah, I forgot to actually put the stop loss. So that'd be just there. Yep. I think it's gonna. Yep. There we go. Wait a second. Sorry. There we go. Alright, so this trade has been eliminated. We lost that. Here's a fair value gap. This might be a fair value gap we needed. Okay. Okay. One thing. Cheers would be for next session actually. Cheers. Sometime. Thinking there might be a fair value gap here because this was tested. I would say this one, but These went straight through it. Yeah, I think it is. Should be a. Here's that setting. Yeah, then. Oh, I don't understand this. But you know what, I think let's just move to 15 minutes. I can't do 5 minutes to save my life. Uh, there. Okay. Okay, there's one Fair Valley Gap. Okay, yeah. Yeah, I think actually. Yeah, that's a Fair Valley Gap. This problem resistance you see right here is the Fair Valley Gap. So for us testing and in confirmation, this is a downtrend, so we're looking at highs. No, okay, wait, so it's uptrend. Now those. Okay, we could show it, but you know what? I'm gonna, yeah, yeah, you know, I'm gonna switch graphs. Oh, spinning is horrendous, bro. I need the sessions. Let me see if it's, yeah, where are they? Yeah. Okay. Well, you know what? Okay, let's just go try and might just be terrible. Let's go to trading view. Yeah, so this did the exact opposite as I expected it to do. Hold. Sessions. New York, London, Tokyo. What even is this? Yes. Sydney? Okay. Is that not custom? In Tokyo. Tokyo will do. Okay, let's start here. First, we'll see how much pips this is. Yeah, so still 1 pip. 1 pip trades, you have to use a bit more. Yeah, you have to use a higher lot size to make a even decent amount of profit. Hey, what do I know? Okay. I'm just gonna walk through this and see what I would have traded. Alright, so I'm guessing this. This is London, this is New York, red is Asian. So this is the overlap. Okay. As you can see, London, quite a lot. New York. Okay, wait a second. Okay. Start of New York is okay. London is a lot of buys, New York is sell, and well, New York I think is roughly around the same time. Yes, as you can see, there was a low here, and I got taken out by liquidity here. This got taken out. Gosh. This got taken out. This got taken out. Start of London. Okay. So far, this is the most prominent low. This is the most thing high. London session starts like heavy buys, liquidity sweat, and declines. Bearish, then consolidates, and well, it starts to buy. Yeah, it starts to buy when New York opens. So I guess this. Yes, I'm pretty sure New York. Okay. Let's see New York only. Yeah, there we go. Yeah, New York tends to have quite a bit of momentum. Alright, so using the same strategy as we were before. Let's say New York session just started. We just ignore that part. Alright, what was I? Okay, okay, never mind, bro. So anyway, New York opens here, and so anyway, New York opens here. My fault. No, just checking. So where was I? New York opens here. So far, we've got highs are right here. Let's mark them. Change it to white. And so far, lows are right. Okay, this is the low, the most prominent and the most recent, I guess. Okay, so alright, alright, this might make do for the premium version, because I'm not paying for that. So yeah, so far we can see that it's the uptrend. Actually, wait, okay, so okay, so this is a downtrend right now. Okay, because okay, downtrend, so we're looking at highs. So this is a high right here, and we look for anything below this. Yeah, this and low side becomes a high uptrend from here. So uptrend, we're looking at lows. So this low no is broken yet. This low no is broken yet. This low not broken yet, and this low not broken yet. So far it's an uptrend. So I guess Well, right now, you put it down. This is a fair value gap, by the way, we could mark that. Yeah, so as this goes on, then we'll check. Okay, it goes up. Goes up, there we go, liquidity sweep. Then the most, okay, liquidity sweep, then we're looking for break structure. This is uptrend, so we're looking at lows. So this is the most, well, you know, okay, so this is the most recent low, and so far next, there we go. This most recent low, this ends below it. So from here, you could do a short, put it here. Areas of liquidity, just aim for the bottom, to be fair. And we would put this, actually, yeah, we'll aim it there. We looked at. Alright, then what goes on? Well, we hit our take profit. There we go. It's not even 1 pip code. And let me just get rid of this. And yeah, so that gets hit. Same thing for next session. So far the highs are, okay, so this is a high. And this is the low. The high gets taken out, liquidity sweep. This is a fair value gap. Let's mark that. Okay, it's a fair value gap. I'm pretty sure there's one fair value gap here, but that's mitigated. Alright, so yeah, liquidity sweep. That's uptrend. We're looking for break structure. So downtrend, to change it to a downtrend, we're looking at lows. So that's a red and then a green. So right here, that's our low. This is our wait. Okay, red and then this. So this is the most recent. This is underneath that. This is a breaker structure, so it's, well, we wouldn't take it because we're still looking for the liquidity sweep. Oh, sorry, not liquidity. We're still looking for the fair value gap confluence. So as you go on, this isn't really a confluence, I guess, because actually, yeah, because this is a confluence since it doesn't break, it doesn't break the fair value gap, and as you can see from here, it like it sits on it basically in the most, you know, easiest way I can describe that. Yeah, so then just judging from this, okay, so far hasn't broken through, could go long here. You put it just under the fair value gap, and then for here you look for areas of liquidity, and so far it would just be this. Okay, so this would be your area. Oh, yeah, okay. Well, this would be your most recent high that it's aiming to get. You could use this, which is what it did go past, but well, realistically, you wouldn't go for that. I mean, you could go for that. Like more people would just be, they wouldn't be as greedy, I guess, and they'll just aim for this one because they're using stop losses. And with that being considered, that's a pretty bad trade. Looking at the ratio, check the ratio for up here. Yeah, that would be a good trade. But if it's just up to here, that's a bad trade. Alright, let's get rid of this. Okay, New York session opens again. Let's look at it. Okay, I right there, low is there. Okay, New York session opens where? Okay, you can see it's an uptrend, but there's no liquidity should be yet, you know, um, to take advantage of. This goes up, then eventually goes down, but there's no sort of, there's nothing logical to trade off of. So then when this goes here, then so this would be a bad day to trade on. Then the next day, liquidity is swept. It's 15 minutes. Ah, liquidity is swept. There's a fair value gap. Okay, so then look at breaker structure. This is uptrend, so we're looking at lows. So there's no lows here. Then there's a low here. This is underneath it. See how this also here? There's some sort of liquidity here. That's the sweep from here. So yeah, so this is a downtrend. Then it gets broken here, so it becomes a uptrend. Oh, sorry, this is the uptrend, and this is the low. So this becomes a downtrend, and a downtrend we're looking at high. So highs would be you could well, some people would have traded off that, but they would have no. See, this is the thing. You could trade so like not considering any of these candles, but from this point on, because as you can see, liquidity sweep, then this is a breaker structure, then and this will it's going down now because it's a downtrend. Then they would think it would go for the offer liquidity. It would go for here. So they would have what they might have done is they would have put this here and they would have aimed for here, which would have been a good trade, but it just shows the importance of having all confluences checked. Because that was only two of them, because we didn't check the fair value gap. We have a marked, but there's no sort of, proof of it right now. There's no confirmation. So yeah, this is a breaker structure here. So then next so it's a downtrend, so we're looking at highs now. So highs would be a green and then a red. Next green and red is here, and that's it's not beaten yet. So far it's still a downtrend, I guess. So here it's not beaten. And this no beaten. This is beaten. Okay. So when you get to here, no wait, downtrend. This is downtrend. Okay. Green and red. Sorry. So we look at green and red. Then this one hasn't broken. Green and red. This one has not been broken. The wicks don't count. It's the body of the candle. This one hasn't been broken. This one hasn't been broken. This one hasn't. This one hasn't. This one has been broken. But, well, has been broken for a while. But that's not the most recent one, if that makes sense. It's broken here, but this is the most recent high. So this is the next recent. Then it would be this one, then this one, then this one. And at this point, all of these break it, so it's looking at the uptrend. And then, but uptrend, even with the fair value gap, all of this like is still not, it's not correlating to it because it's been broken. So I guess this also would be a bad day to trade in. So let's look at next. Okay, this where this high has been swept. Okay. So far this is low, and we label this as the high. Okay. This is a downtrend. We're looking at highs for breaker structure, because right now it's downtrend breaker structure. It could continue going down, but I mean we're still monitoring to see if it would switch. So we're looking at highs. Highs would be a red then a green, so which is here. The first high we see right after it, right right after it we see a breaker structure. So ideally at that point here you could go. Well, you should have. I mean, if you're gambling, yeah, I guess you could go for it, but you shouldn't take it here because that's just one out of the three. Because there's no liquidity sweep yet. Yeah, there's no liquidity sweep yet. So then eventually it goes up. There we go, liquidity sweep. Now we're looking for fair value gaps. There's one right here. Okay. Okay, so we're uptrend right now. Up to here, we're uptrend. Now we're monitoring for a downtrend. Downtrend is when we're looking at the lows of the uptrend. So that would be red. I mean, that would be, yeah, red then green. So here, and when this next broken is here. So at this point would be a downtrend, as you can see, downtrend. But this is resisting by the thing. This could potentially, you could, no, you couldn't. Sorry. Yep, goes down because it's a downtrend. And this is a mini uptrend, I guess. Yeah, so at this moment, it's a breaker structure, so some people would think that it's going back up again, but you know, I don't even know what I'm talking about anymore. I don't know. You know what? Let's do something different and watch a TJR video.
If you give me 20 seconds, I will guarantee that you sign 20 clients. How? Well, I'm going to help you use the exact same.
Oh, what's good? I just remembered that I have to film a day in the life thing for the next Fair Value Gap video. So here I am. This is going to be the start of the video intro. What's new with TJR? Whole lot of nothing. It's NFT week this week, so markets are pretty choppy. But if you look at market, it did exactly what we said in the past two videos, right? We had a sweep below the previous weekly low, and now we're pushing up. Yeah, I told you guys. I told you. Yeah. So that is what's happening right now. I'll go into it in the Fair Value Gap trade. I'm not going to like film the chart work portion of it. I'm going to wait until our Fair Value Gap that I marked out on the daily time frame gets filled, so I can use it as like a little dual thing. Like, oh, in the past two videos, I said this Fair Value Gap would fill, and then next thing you know, this is a Fair Value Gap video, and here's how we can use this to get an entry. You know, like I thought that would be kind of cool. I don't know if you guys would think that was cool, but. Yeah, what am I doing today? I'm about to go to the gym, about to be a good time, about to lift. I'm about to, and then after the gym, I'm going to take my dog to the dog park. He's gonna have a good time. The 49ers won yesterday. That was lit. But yeah, other than that, like literally nothing else has been going on. I don't really do that much besides lift, play basketball, and trade, and then hang out with friends. Like when people say like, oh, bro, like we want to see day in the life, dude, I don't do that much exciting things. Like I just kick it with friends. Like I sit here and talk with friends, like as you guys do. I'm not always like out doing exciting like trading things. Like I don't really know what you guys are expecting out of my life. But since I started this YouTube channel, I've been thinking like, yo, I want to like do like fun things for like each video. So I'm going to try and like do some sort of event thing, maybe like pop out to a concert. That would be lit. But I don't think there's anybody cool coming to this area anytime soon. So yeah, that's. But. He is somehow army crawl. That was a crazy going on during the. After that, I will probably see Friday, which you're probably seeing right now. So hopefully it's Friday. If it's Saturday, I'm sorry, I suck. Or the Fiverr guy sucks because most of the time I'm just waiting on him to finish his thumbnails. But yeah, that's pretty much it for today. This is the trade that we took. Look at that. Beauty. Beauty. Absolutely beautiful. And look at that dog. Look at the dog. Yeah. But anyways, that's it. I'll probably maybe update you guys what I'm doing like halfway through the day, but not that interesting. This week has been kind of boring for me. Just been doing like business stuff. All right, yo, what's good, guys? Welcome to the chart portion of the vid. Hope you enjoyed the day in the life. Each time I'm just going to try and make it better and better for you guys. I think this past day in life, like the video that you just watched, was a lot better than the last one. I was a lot more up to date with it. So hold me accountable. Let's keep these videos coming out. Keep pressuring me, or else I'll like forget to do them. So thank you for all the support too. All right, this video is going to be on how we can spot fair value gaps in the market. We're going to talk about what fair value gaps are, how to spot them, and how to use them for entries. All right, and then I kind of do fair value gaps a little bit different than ICT, and I know a lot of you guys follow ICT, Inner Circle Trader. If you don't, I highly suggest watching him because he made this methodology, the fair value gap. It's his. I do not own it. I learned it from him, but I do it a little bit differently than him. Because like I say, you can only be the master of your own strategy. You'll always be the student of someone else's, and I ain't no student. All right, so let's get into this. First of all, if we're looking at what we said last week would happen, right? We swept this low, and then obviously we pushed up. Today was NFP, so we tanked, right? But we did get our push below and then push up, getting those, getting these swing traders out of the market, right? So first of all, before we go into the chart, we're just going to talk about what a fair value gap is, okay? So fair value gap is an imbalance within the market, okay? So oftentimes, you know, sometimes you'll see like a break of support or a break of resistance with a impulse candle, meaning just like a full candle, something that looks like this, right? If we zoom in super close on this, right? This candle right here is the impulse candle, right? Right in here, right? It's just one massive black candle moving down, and then same thing to the upside, right? We can have impulse candles to the upside. Let me see if I can find one. I can't really find any significant ones. I see this one right here, right? It's breaking. It's just an impulse candle through resistance or support, right? The retail trading stuff. So when that happens, it creates an imbalance within the market, okay? Meaning, if we go back to this impulse candle, right? Meaning all within here, there's potential orders to be filled. Same within here, same within here. these 3 days, right, all of this is all just orders that could be filled, right? Because the banks entered up here, right? They entered into their shorts up here, right? What does that do? It tanks the market down, right? So there are orders to be filled within here, orders to be filled within here, orders to be filled within here, right? So what are we most likely going to see when market comes back up into these levels, right? It's probably going to reject it or fill orders, right? Fill in these gaps, these imbalances within the market, fill the orders that are resting here, and then change direction or use it to maybe move as a retracement, and then you'll get like another move after that. So like for this one, for example, right, we came down and then pushed up, filled orders, pushed down. Okay, what happens when we get in within this candle? Push up, what do? We wick into here, we push down, right? Let's see if we get anything off here. Not much off of here, right? But we did take out these 2 days already, so it doesn't surprise me that we didn't take out that, right? And that's all fair value gap is. Fair value gap is the orders within these impulse moves, okay? So this is how you mark them out, all right? I'll show you when we go into more examples, but if we're doing this candle, for example, okay, you are going to take it from the previous candle. Okay, fair value gap works in 3 candles, okay? The first candle, the gap candle, and then the third candle, okay? So this is our first candle. What do? We take our box, our fair value gap, from the wick, the bottom wick of this candle, to the top wick of this candle, and then pull it over. This is a fair value gap within the market. What happens? We spike up into it, we come down, right? Okay, so by doing that, it helps us, target and label the fair value gap, okay? So we also need to get into, how to use them and when's the right time to use them, right? Because if we were just on the daily chart and we were just saying, oh yeah, like once it comes into this fair value gap, we're just going to sell. That's not really a good plan, right? You need more confluences with it. That's why I don't really like using it just on its own, right? You see fair value gaps all over the place. There's a fair value gap within here. There's a fair value gap within here, right? They're all over. It's just when you're supposed to use them and when the right time is to use them. Okay? So this is a really good example of a fair value gap trade that I actually took. Okay, so first of all, remember our liquidity sweep video from last week? We talked about these highs, right? How it wanted to take them out. What do we get? Remember my strategy. Liquidity sweep, break of structure, enter off a fair value gap, okay? I'm teaching you the third building block of my strategy right now, okay? So what do we have? Liquidity sweep, okay? Then what is this, right? This is the most previous low, right? Push up, come down, push up again. This is the low that was formed, okay? And then what happens? Break structure to the downside. Where are our fair value gaps now, okay? Within here, right? Take it from this wick down to here, okay? Where is the other one? Right here, from this wick down to here. Okay, what do we get? A push up into it, sell off, okay? What happens again? Break of structure. Where's our fair value gap? From this wick down to here. You could have even taken it off this, right? Wicked up into it, push down. Another time, wicked up into it, push down, okay? Filling all the orders within this imbalance, right? And now, on the daily chart, we have this massive fair value gap within here, right? And I was saying last video how I would love for this to get filled, but this was off of news data. So sometimes those fair value gaps don't get filled. Sometimes those imbalances, those orders just don't get filled because it was a news event, right? Okay. Let's show more examples on how we could take a trade. using this strategy, okay, or using this methodology. All right, it's very simple if you combine it for an entry, okay? So what I really look for is 1, liquidity sweep, 2, break of structure, 3, fair value gap entry, or just a retest of previous support or previous resistance. Okay, so I did not trade this morning because it's NFP week, right? But it did offer us an entry, okay? So if we look in here, right, New York Stock Exchange opens at 13, right? So where's the previous high from London session? Right here, or we can even drag this over right here, right? It's a little bit higher. Remember from our liquidity sweep video, what do we want? New York session open, sweeps liquidity. Okay, let's go down into a smaller time frame. Okay, look at this. What do we have? Sweep of liquidity. Where is our previous low? Right here. Break of structure. Wait for a fair value gap. All right, where is our fair value gap? Massive one within this news candle, right? But look what happens, right? We come down, fill more orders, push down, leg down right here. This is a trade that you can take, right? Short position. Once we enter into the fair value gap, you can just put the stop loss above the fair value gap. What are you going to do? Target previous lows, whatever. We're on the 1 minute chart. I don't want to go deeper, but whatever. Target just like a 1-to-1 risk to reward ratio, take profit hit, right? And some, right? We pushed all the way down, right? We pushed far off of this. Okay, let's look at some more examples. Okay, let me just start putting on random, let me just start putting on sessions, and we can do what we did last vid. Hopefully this will help you guys out. Ooh, okay. Or actually, we'll just go around and just start spotting them. Okay. So what's this? Okay, 1 minute chart. Okay. Fair value gap within here. What do you see market do? From wick, impulse candle, what does market do? Come within the fair value gap, boom, sell off. And another methodology that a lot of people teach with fair value gaps is people say this, I don't know how much I trust it, but people say that more often than not, fair value gaps get filled 50%. So I have this GAN box that I changed the settings for. So sometimes I'll set up this GAN box and use this as my fair value gap, and then I'll enter at the 0.5, right? Because that's at the 50%, because more like almost 100% of the time, fair value gaps will get filled 50% or all the way up to the top, right? So what a lot of people will do is they'll enter at the 50%, right? Just so they can have a better entry than entering all the way down here. Put their stop loss above the most recent high, right? What do we have? Target previous liquidity, 1-to-3 risk to reward ratio, bing bong boom, whole lot of money being made. Okay, let's keep looking, right? So what do we have here, right? So like this, I just want you guys to be able to see these easier, right? We had break of structure to the downside, right? Oftentimes, when you get the break of structure, think about it this way. When you get a break of structure, what does the candle look that usually breaks structure, right? It looks like an impulse candle. That impulse candle is where you want to enter off of, right? Because that's where your fair value gap is. That's where the imbalances are going to be. Okay, let's go to a foreign exchange pair. And fair value gaps are not just on the 1 minute. They're all over, okay? My dog's crying like a baby. Okay. This one, okay? What do we have? Break of structure on the 15 minute, right? Breaking this low, and this low in one candle, okay? Map out our fair value gap, wick. What do? Fill it 50%, enter at the 50, stop above here, target previous areas of liquidity, target right here, money made. Right, and this isn't even using it in confluence with my other strategy. I'm literally just pointing out fair value gaps within the market, okay? What do we have right here? Impulse move up, breaking resistance, okay? What's within here? A fair value gap, right? This is what one looks like to the upside, okay? Enter at the 15, or at the 50% mark, stop loss either below, this fair value gap, right? Because this still could be a valid fair value gap, same with this one down here. But most of the time, off of a push up, it usually only fills the most recent one, okay? So enter on the 50, stop loss either under this wick right here, or you can cover it down here, okay? What are we targeting? Previous areas of liquidity, target right here, right? Target, we don't have, target all the way up here, right? What do? Take profit hit, a lot of money made. I hope you guys are spotting these. It's very simple once you start like pointing them out, okay? Let's go into the 1 hour and show you how this happens on larger time frames. Or we can even do the 4 hour. 4 hour would be fun. Okay, what do we have here? Push up, come down, push up again. Break of structure. Okay. Break of structure. All right. Where's our fair value gap right now? Right? Impulse move down. Put our Gann box on. Boom. Mark out our fair value gap from this wick to this wick. Impulse candle. What does it do? Let me get rid of this. Okay. What are we going to do? Short at the 50%. Stop loss over previous high or just above this wick, right? Because this is the end of the fair value gap. Okay, what do we target? Previous areas of liquidity. This can be our first take profit. Okay, this one can be our next one. Okay, this one can be our next one. What is that? 2 take profits hit, TP3 on the way. Okay, it's that simple, you guys. Look for a break of structure. You don't even need a liquidity sweep, bro. Like my strategy, like you can take bits and pieces off of mine and make it work for you guys. I'm just showing you how mine works and how I do it, because with a liquidity sweep, you know market's going to be moving, right? You know the banks have induced a move so they can push it in their direction. So we know that we have a bias, right? We have a liquidity sweep. What do we look for next? A break of structure, meaning we are for sure going in that other direction, right? Break of market structure, we're changing direction. What do we have next after that, right? You could enter off of just a liquidity sweep. You could enter just off a break of structure. Nah, but I want to be very precise, right? We're trying to get high win rates, right? So what do we need first? Sweep of liquidity. What do we need next? A break of structure. What do we want right after that to get a pinpoint entry, fair value gap off? What do we even, the banks have induced a move so they can push it in their direction. So we know that we have a bias, right? We have a liquidity sweep. What do we look for next? A break of structure, meaning we are for sure going in that other direction, right? Break of market structure, we're changing direction. What do we have next after that, right? You could enter off of just a liquidity sweep. You could enter just off a break of structure. Nah, but I want to be very precise, right? We're trying to get high win rates, right? So what do we need first? Sweep of liquidity. What do we need next? A break of structure. What do we want right after that to get a pinpoint entry, fair value gap off of the break of structure? All right. Let me show you a couple more examples, and then I'll wrap this up because this video doesn't really need to be too long. Okay. What do we have here? Continuation to the downside. Break of structure, right? We broke this low, impulse candle. What do? Draw out our fair value gap from here to here. Broke this, okay? What do we have here? Continuation to the downside. Break of structure, right? We broke this low, impulse candle. What do? Draw out our fair value gap from here to here. Okay, fair value gaps, guys, are anytime there's a gap within a wick and a wick. All right? Give me a second. My dog's eating the carpet. No. Come here. Boogie. Lay. Wait. All right. A fair value gap is anywhere between a wick and a wick with an impulse candle in between. All right. What do we do? Short off of the 50%. Stop loss. Not all the way up there. Above the fair value gap. Okay. What do we target? Previous areas of liquidity. We can target this low as our first one. 1 to 2 risk to reward ratio. Already hit. This is our next one. 1 to 3 risk to reward ratio. Odds are this is going to get hit. Here's another fair value gap, guys. Look. Come up. First of all, there's one within here, right? Here to this wick. What happens? Fill it in the 50, push up. Okay? Break of structure to the upside, impulse candles up. What do? Mark out our fair value gap, boom. Down to here. Doesn't fill it all the way into the 50, but you see that it does enter it, right? Gathered orders pushed up. Okay? We're going to do one more example, and then I'm going to wrap this up. Hopefully you guys are getting this. Okay? Let's see. Choose a good one. I'm just eyeballing it. We can do it on the daily. Because that was on the 4 hour, you guys, and I take these trades off of like the one minute, right? So this happen. All of my strategies happen on every single time frame. You can swing trade with this. You can scalp with this. You can do whatever you want with this, as long as you have liquidity sweep, break of structure, fair value gap. That's all you need. Odds are you will win the trade. Like half the time, if I lose a day trade, it's just due to human error. It's due to me spotting either liquidity wrong. That's honestly what it is pretty much every time. It's me getting liquidity wrong and then entering off a false break of structure, and then I'll just lose the trade because it was user error, right? It was me thinking, oh, this is liquidity, but it actually wasn't. There was a break of structure, and break of structures aren't too significant off of a non-sweep of liquidity, at least on a new session open. So, I'll probably end up losing that trade. Sometimes I'll get lucky, but you know what I'm saying? All right. So if we're looking at GJ right now, let's find a fair value gap. Here's one. Okay. What do we have? Push up, come down, breaks this low, break of structure, push up, push up, push up, come down, breaks this low, break of structure, push up, push up. Nothing, no like impulse moves, right? No fair value gaps within here, right? There definitely will be on like smaller time frames, but we're on the daily right now, so we're just trying to show you that this works everywhere. Okay, but what do we have here? Impulse move down, break of structure. What are we looking for? Boom, fair value gap, boom. From wick to wick, what do? Enter off the 50, okay? Short position, boom. Stop loss, we can either do it, or actually, yeah, no, it is going to be above that high, above the fair value gap high, right? What do we target? Previous areas of liquidity. Target right here, right? Because, I mean, you could target previous resistance, like just in case, right? Target like this area, right? And then what do? Target previous areas of liquidity, this low, these lows, right? They all take profits, getting hit, right? It's very simple stuff, you guys. Okay, I think I'm going to wrap it up there. I know it was a short chart time. Hopefully you guys enjoyed it. Hopefully you guys enjoyed the day in the life. I'll keep trying to make these videos better and better. Hopefully this video is a lot better than the past one.
Alright, so just finished watching that video. Some more back testing, I guess. Who's this? No, this isn't. Okay, wait, let me go to Trading View first and just test it out. I think it was. Okay. Actually, no. Oh gosh. Okay, let's test this out. Downtrend. Downtrend, we're looking at highs. So this is here, pretty good structure. The same thing for this one. Yes. Okay, this is good enough, bro. Okay, so where are we? Let's just see if I can get the Fair Value Gap done. So far, it's a downtrend. Downtrend, we're looking at highs. So recent high would be here. That's broken. That is, I guess, a Fair Value Gap. Okay. How do I? Oh gosh, I have to do this again. You know, oh gosh, gosh. Okay, never mind. It's just longer though. Okay, this might be what we needed. It is. There we go. It's tested it and it's not coming through. Okay, never mind. I think this would be the best time for a long. Okay. Put it there. See how it plays out. Okay. It's eventually gonna go up though. Yeah, you know what? Wait, I'm never doing this again. Fishy.